Hi, David here with Futures Trading. Want to give you some more content. All right. So this time we're going to talk about ranges and support and resistance levels. So I put out on last week the price patterns that you can use in conjunction with the ranges. So this is what we did on Friday, and then we're going to get right into that content, and I'm going to show you how it played out this morning as well. So on Friday's video, with the news and the open, I told you, that this price level here, as well as this bar, they do not supposed to get a close underneath. Okay, and there's the activity trading right into that. Okay, and then they stayed up all day long. And so this morning, the same activity showed itself again. So I hope you are using this content. These two bars here, right here, this bar's low isn't touching that bar's mid. All right. And of course, this green bar here is low, is not touching that mid of that red one. And so no close back above the open, I mean, the high of these bars. All right. And that's really, really important. And the stop can go behind the bar, and that's the other piece. The stop can go behind the bar that this happens. So if you get the bar, here, the prior bar, and then the next one trading, it pushes away from that low, which is a breakout. Every bar's high and low is a pivot. So if it moves away from the low of that bar far enough, you just don't want that low to touch that mid if you're not familiar with the setup. And so the stop can go behind this bar here, but you definitely do not want to see a close back above there. And sometimes they keep overshooting it as if they're going to take that stop, but then they turn around and they take off. And of course, in the opposite sense, it's this. All right. So break above the high. You want to make sure that that bar's high do not touch that mid. No close back above here, back below there, and then the stop outside of there. Well, this morning again, it works from this side as well. It does. It's just I made sure that I filter it a bit, and you can do the same, or you don't have to. It works in either way. This bar's low isn't touching this bar's mid. No close back above this bar here. Okay, no close back above this bar here. Stop right here. Okay, so it's not to say that it can't work without the requirement of a moving average. You can do it that way, but I try to put a filter there for people that needs to have that, have that guideline, so they're not just randomly jumping every setup. All right, so but that's how it played out this morning, kind of the same price action. I hope you're using this content. So now what I'm going to do is I'm going to show you three different ways. We're going to take a look at roughly three different ways to try to look at location to take trades. So, using some of the content that I'm putting in front of you, try to find areas where we can go ahead and take trades and benefit from it. So, I did put in the first video I made, I believe, this 6:15, 7:45 a.m. Eastern Standard Time range, but I didn't officially release it to you. So, now I'm going to do that. And I'm going to give you another one. All right. So, if you're not trading Eastern Standard Time, you're not on the East Coast, here's another time for you to consider, and it's just as effective. All right, so we're going to look through the chart, and I'll show you several examples of it, not just right now and what they're doing this morning. So this 12:15 a.m. Eastern until 1:45 a.m. Eastern. All right, and that's the gray zone here. All right, we're going to take a look back at probably about I say 10, 20 days of it, so you can kind of get an eye of what it looks like, and then I'm going to show you a couple other methods on gauging support and resistance and kind of how to get into it. Again, simple stuff, nothing really complicated, and nothing too subjective. And that's the other part, something that's repeatable. Okay, and that's the thing. I definitely try to approach with trading. Been doing this for many many years, and everything needs to have a behavior to it where it's pretty much predictable. All right, so there's that 12:15 to 1:45 range. That's the gray one. The blue one is that 6:15 to 7:45 a.m. All right, and this will try to get you a jump on the 9:30. This can get you a jump on the London. So if you someone that like this, trade the London, this should be able to help and kind of give you a reference point. And as you can see, we ran down there and kind of stopped cold there. Now let's just take a look back, and then I'm gonna put in front of you the other different ways to get into it. All right, so now here's Friday, all right, before the big run up. All right, so here's Friday. That 12:15, 1:45 range was set here. All right, so you knew that that range was there, right there. All right, there's the lean down, used it for support, pushed up, and then that's when you begin to work on the 6:15, 7:45 range. Kind of the same activity from this morning. All right, so we set the range, here. All right, so the range was set right here. Okay. Now what you want to do is you want to see if you can get that support play and try to play off it and kind of get that run that you're looking for, and vice versa for the shorts. If you can get up under it and they kind of use it for resistance, then there you have it. Now again, that's that Friday's move. All right, now let's take a look contextually at some more of it. All right, so here's another instance of it here. The range was set, okay, right here. We lean back into it, kiss the back of it, and then boom, there's your run. All right, so now let's take a few more looks. And again, you can do this on your own. I just want to put something in front of you to kind of help you with your trading. It's simple. And again, it's a very, very effective, predictable behavior. That's the only thing I trade. So it has to be something that I can identify readily no sooner I look at the chart. All right, so here's several instances of this where you're getting the support and resistance plays. Here's, of course, several references to that 12:15, 1:45 a.m. Range there, and there's the pop. Okay, and here's that 6:15, 7:45 here. Okay, so we had to drop down, of course, first because this come overnight. Reference back into the means, played it a few times. There's the drop, and then here's the turnaround to come back and play from above. Again, this is simple stuff, nothing complicated. Here's several more examples for you. All right. So now let's take a look at the hourly. All right, so I gave you enough of that. Now let's take a look at that hourly, and I'm gonna tell you something else that you can use if you do not want to use the ranges. If you someone that don't want to do that and you say, I don't have time to try to lock in these times. I just like price. Well, here's something for you as well. And then I got one more thing I'm gonna give to you, and then I'll let you go. Don't want to hold you long. So I managed to just put a few lines on the chart, price levels that's really, really simple and very, very important. You'll see why when I scroll through the chart. It definitely caught this morning's activity. So if you're not someone that want to play the ranges, or if you want to build a confluence for this, you can do that as well. Kind of collectively put them both together. I put several lines on the chart. The prices are similar. You can look on the axis here and kind of see that right now. 550 is where you want to start. That's number one. Find your 550 on your chart, and then from there build outwardly from, of course, the bottom as well as above. You have 250 from below, 150, 950, 850. All right, so we managed to hit that 550 there, turned around. Now, to know the turnaround, it's usually 100 points away from it. So somewhere between 550 and 650, they shouldn't touch that 650 and they should turn. And vice versa. If they come down to the 250, you don't want them to touch the 150 if they're going to turn at the 250 and turn, and vice versa when it comes to the 850. Let's go 850. You don't want them to touch 950. They should turn, kind of give you a relief, a pullback, and then boom, let's take off again. All right. So that's kind of how you would play these levels. Now, if you want to know if it'll keep going, clearly, if they just touch, let's say 650 and a quarter. So if they go one tick outside of it, is a chance they definitely gonna keep going to the next level. And oftentimes they'll trick you. They'll pull back and then they'll go. So just a little bit of information there for you. And again, if you can close above the level, and that's really, really important, if you can get those consecutive closes above the level, that's even more the reason to believe that it'll continue on. So now let's scroll back and just begin to take a look at some of this information. Again, don't want to hold you long. You kind of see the base there before we did the run up. And again, the space in between the levels play definitely into your profit margin. So if you can get, of course, the space to be somewhat wide between the levels, you can kind of see the increase in the bar size as well as the acceleration in the run. So you'll kind of get that. And if the levels are really, really close, here's something that you can definitely pay attention to. They'll tend to want to channel and kind of play with you for a bit before they get on their way. All right, so again, there's some resistance for you. There's some support. Definitely just accelerate it through, and this is what I'm talking about. Or you may get just one big bar, and that's something else you can definitely take a look at. Now, there's the resistance play we tried to pull down, but that didn't work. And so we got stuck in there for some hours. But again, there's the two big bars. And we kind of had a catalyst right off here, off this price level here at that 950. They dropped down near the 850. And again, I told you, if they're going to play that 950, they won't touch 850 and they should turn around and they should just go. All right. So, and again, here's the turnaround for the 850. So if you plan that 850, of course, you don't want them to drop down to the 750 and it should turn around. All right. Now, again, here's several reference points there. There's a support play right there off of that 950. You can see the 250 play resistance. They dropped down, got right under that level, and then played back up to the upside. Here's a 950. They didn't hit it, and they kind of came really, really close there. And again, all the price action tend to get really compressed right between the levels that's really, really close. And so you might want to watch out for that if you want to know why is it that the hourly is doing that to me? You know, and a whole lot of people say, I don't understand. I'm trying to swing trade in it. Well, this is kind of one of those things. They get stuck right between some price levels that's really, really of interest. And then, of course, they'll give you a hard time. So hopefully that will help too. So if you're not, again, someone that want to trade those ranges, that's fine. There's some price levels for you that you can begin to watch. Now, here's something else. Now, the chart is not pretty. I'm gonna tell you that right now. It's kind of ugly, but I had to do it this way because I didn't have another way of going about being able to put these lines on the chart. I tried several different ways, and this is the best I can come up with. Usually, we're going to deal with the price scale from top to bottom. Really, really simple stuff. Again, if you're in the center of the chart, and I hope you can see these little gray lines here, the center of the chart, that's your means. All right, so they can come up to the means, then turn away. And I got a 5 second chart running here, so you can kind of get it, really, really fast. Just can't hold you long. Want you to be able to see this content really, really fast. So run up to the center of the chart. There's a 50% chance that'll happen. Now, 75% chance or greater for them to run all the way to the other side. All right, so there's a less likely for that to happen. It's definitely less likely. Uh, so here we go. Center down here, somewhere right in this area, they can begin to base out. Now, here's the trick, and this is what I got the moving average up here for, to kind of give you a measure to kind of measure it by. I know people like oscillators, and you can go with that. Again, there's nothing wrong with oscillators either. I know settings to oscillators that can probably catch you turns as well. Maybe one day I'll get into that with you. But this is something that can be helpful. You can utilize the moving average, and the further it trade down into the lower portion of the screen, okay, in the lower quarter, if you will. Now, of course, it calculates. It's an adjusting thing. That's what it does. So the further it can move into the lower quarter of your chart, okay, there's a chance that price will begin to base and slow down for you. Now, you want to kind of see if that average, and again, you can use whatever moving average you want from a 10 to maybe a 20 or anything greater. It doesn't matter. But roughly, let's try to get right there around that 20 area if you can, somewhere in there, just somewhere in there. And simple, exponential, it doesn't matter. You pick. Now, either you're going to get the turn that you're looking for, or it may be an acceleration, right? And that's the other part of it too. And so, you can do it with just price if you would like to, but oftentimes it's better to try to get the average to come into the lower quarter of your chart. And because at that point, it's easy for price to just jump it. Okay. So that's some information to consider. If you need the average to change its angulation and head up, you don't want it still angling down. If it's still angling down, there's a chance you're going to need some really strong momentum to get it to begin to turn. So it's not that a parabolic move can't happen, it's just something that you'll want to kind of keep in mind. So from the center of the chart back down, definitely something that's going to keep happening. So if you don't have Fibonacci, if you don't want to draw trend lines on your chart and all that stuff, you can kind of just go with an average. That'll kind of give you slope, and then you can go with using your price scale. Right? Price scale, and this is something according to time as well. So it's not just according to price, it's also utilizing the time axis as well, because this is projected forward. So the longer that they can stay above the lower quarter of your chart, there's a 50% chance that they'll move up to the center of the chart. Now, once it gets there, you can throw in the two-leg removal and that kind of process. You can kind of go with that and see if that can play out for you. Let me get this line for you. So we had a leg here, and then we had I got to stay in draw mode. Okay, so we had a leg there. We'll take another look at this. And of course, we had a leg here. All right. So, all things considered, down near the bottom lower quarter of the chart, if you pop up and run to the center of the chart, two-leg removal is a reversal. So, you come down, you push up, you get past the first leg, just don't pass the second one. And then they take off again. So, now let's see what this can become. And again, this is just a 5 second chart, just trying to give you some sensible information, something that just makes just sense, and you can understand that it should work for you. So we drew the zone here. Okay, now I'll change the opacity of this so you can really, really see it. Again, the lines are ugly. I just had to put something there so you can kind of get an idea of the lower portion or the higher course, the higher portion of the chart. And I had that blue line in for some reason. I don't know, but there's the information there. And again, they shouldn't make it up here. It's less likely for it to happen, and that's something you can kind of keep in mind and say, hey, if you're pulling up, as long as you do not knock out two legs, it's a chance that you will turn back around. So this would be, let's go like this. And again, the moving average, if you can see the angulation, it shifts right around the center, or well, I'll say the lower quarter of the lower portion of the chart. Okay. And that's something you'll want to try to get it to do. You can take out this leg, just don't take out this one here. And we should end up back down. As you can see, the center, yeah, we don't want it to go too far up there. The center is roughly right about there. Now, of course, you have two legs off the bottom, kind of dove down into that middle, kind of did that. You can take out the first leg, which is this. Okay, you can take out, just do not take out that turn. Of course, you don't want them there. So if you're trying to counter it, that's how you would play it. You would try to get them to come right into this location here. And again, you can use volume, you can use whatever it is that you like to use in your trading. This is just another way of looking at the market. Or you can play back to the downside. This bar's low isn't touching that bar's mid. No close back above this bar, and stop and go behind that bar. You can kind of go at it from that vantage point if you would like. And so they pull up to that price level. You can see that they overshot it on this bar here. No close back above that price level. You might can turn back down and go down. And let's see if they'll actually do that. I'll just stall out just for a couple more seconds, and then I'll let you go. All right, so no close back above that price level. Predictable behavior. That's all I trade. Okay, there's the overshoot of this leg here. That makes sense. You can take out that leg, just do not take out this one. All right, so now there's several tests here, of the high of this bar. Okay, the high of that bar is important. And so stop behind that bar, or, however you want to play it. It's just an idea. I want to give you ideas to consider. And so let's see if they can do it again. So there's a bar here. It didn't touch that bar's mid. They got above that high. They just closed, but you had to test there, and they didn't want to do it right away. But here's the bounce out of that zone. Okay. And again, you can zone out your chart. Just use the right side margin here. Just take that axis, if you will, and begin to zone it out. And it'll give you somewhat of a context as to what price can do. Is again, it's not 100%. Nothing I would ever show you would be that. And this again is ranges, static levels, and of course, chart scale. Three different ways to look at the market and, of course, try to trade it the best you know how. All right, so I wish you all the best with your trading. I'll be back sometime later this week or maybe next week with another video. And thank you for all the subscribers. I really appreciate it. I got two, and I am happy. I mean, I'm really happy that someone is taking a look at the content, and definitely anyone that's viewing any of this information across the different social media networks. I appreciate you guys doing that as well. And I wish you all the best with your trading. Take